Thank you for joining us this morning in person and online. And I'd like to say thank you to DQ and the Australian government for hosting us here today. My name is Marwa Curran and I'm from the Investor Group on Climate Change in Australia. We're a non-profit member organisation representing institutional investors across Australia and New Zealand with over $20 trillion of assets under management globally. Our sister organisation is the Asia Investor Group on Climate Change, and they represent investors across 11 Asian markets with over $32 trillion of assets under management globally. So together with our members, our focus is on managing the risks and opportunities of climate change on investments. This is with the aim to protect and enhance the long-term capital that's being invested on behalf of millions. So before I hand over to our esteemed panel on the stage and Anjali Viswamohanan from IGCC, our Director of Policy who'll be moderating the session today, I'd like to just give some background to frame our discussion and some context. So I'm sure this is not the first dialogue you've sat in on or heard about with regards to mobilisation of private capital to emerging markets over the past week and a half. It's certainly been a very hot topic at COP and with some progressive conversations. In a recently released report titled Australia's Southeast Asia Economic Strategy to 2040, it's noted that Australia stands to benefit from and contribute to the economic growth and development in Southeast Asia by being a reliable and high-quality supplier of commodities. We understand that the scale of new electricity generation and transmission needed in this region is enormous. The region is expected to continue its strong economic growth, compounded at an average growth rate of 4% by 2040, making it the world's fourth largest economy. It's recognised by the Australian government that addressing climate change is central to the security and well-being of the Indo-Pacific. And there are major opportunities for Australian businesses in meeting the region's major infrastructure investment and green energy transition needs. Population growth, including an increasingly large and affluent middle class, and urbanisation trends will create a growing demand for a wider range of goods and services. We know that the success of the global energy transition depends on emerging markets establishing a strong and clean energy base. An IGCC report published earlier this year, which this session is pretty much designed around, notes that pension funds are a well-aligned source of capital for the transition in emerging markets and climate investment. Yet despite this, the report also finds that insufficient investment is being made in these regions. And this is due to a number of challenges and barriers that our panelists will talk about today. And that includes challenges such as governance, risk, and financial return. So the session aims to support and is aligned with Australia's objectives for the action agenda at this conference, in that it supports a global acceleration in renewable energy uptake. It showcases Australia's climate action, both at home and in the region, and encourages collaboration in support of an ambitious global response to climate change. So with that context to frame our discussion today, I'll hand over to Anjali to moderate our session. Thank you.
Thanks, Marwa. And thank you, everyone, for joining us today, even though it's the nail-biting 48 hours before COP ends. So we're at a very exciting time in the negotiation process, and we're quite thrilled to be joined by my panelists here to be discussing some of the real problems that are also part of the negotiations right now. So we've seen that over 100 countries. John tells me it's 130 now. Over 130 countries have already signed the COP28 Global Renewable and Energy Efficiency Pledge that supports the tripling of the renewable energy target and the doubling of the energy efficiency target by 2030. There are also options in the main negotiation text, but countries are really sort of looking into the implementation aspects of these targets and what they will need in terms of support to be able to actually implement them. And as you can imagine, finance, technology, all of these are sort of important aspects to really be discussing. Some of the concerns that's being raised is regarding the equity to access capital, incentives to transition. And as Marwa said, over the course of COP this year, there's been a number of conversations around sort of investing into emerging markets. And some of the themes that we've been hearing to facilitate that is partnerships, platforms, blended finance, capacity building, enabling environment, and others. And these have sort of dominated the conversation for investing into emerging markets and developing economies. And we'll hear more from our panelists on these topics and what else is really required to facilitate finance flows. So today we have with us Dr. Kate Rogers, who's the Assistant Secretary for Climate and Resilience Finance at the Australian Department for Foreign Affairs and Trade. To the left of me, you also have John Grimes, who's the CEO of Smart Energy Council. We have Luke Brown, who's the Head of Policy and Engagement at Climate Work Center. And joining us virtually, we have Dr. Sebastian Thomas, who's the Climate and Environmental Lead at QIC. I think it's important to clarify that QIC stands for the Queensland Investment Corporation, especially when there are similar terms in the Middle East for other investment firms as well. So it's great to have all of you join us today, because I think all of you and the organizations that you represent play a big role in sort of bridging some of the gaps that we highlighted earlier in the context setting part of the discussion. So maybe Kate, we can start with you. So what we've been hearing is that there is a real need for support for emerging markets to be able to perform better, and the Australian government has already been taking a lot of quite fabulous initiatives to really facilitate the enabling environment in emerging markets. One such example is the discussions between Australia and ASEAN on the cooperation on climate. Earlier this year, there was a leaders meeting between Anthony Albanese and the president of Indonesia on the role of ASEAN and its centrality and about working together to create a just and orderly transition to net zero. So can you tell us more about the current climate and infrastructure partnership that has been announced for Indonesia in June 2022, and this is primarily designed to sort of unlock investments. So let's hear more about that.
Okay, thanks very much, and I'm really pleased to. I'm hoping this will be a very good conversation between us on some of these issues, because you're right, they have been canvassed quite a bit across the course of the COP, but not with this particular group of people bringing these particular angles. So pleased to be here. So the Climate and Infrastructure Partnership. It's a really interesting one if you've been working on economic governance and infrastructure financing for a long time, because it is a real step change in the way that we do business. And I think what is really exciting about it is that it is an attempt by the Australian government to create its own platform using its own tools. We've not really done that before, but it's also what it does is that it recognises that we don't need to do everything ourselves. And maybe we'll come back to this later on, but that actually builds on the findings of the government's development finance review. So essentially, it's $200 million Australian, and 100 million of that will go into two different types of funds. 50 million will go into what we now call Australian Development Investments. It was previously called Emerging Markets Impact Investment Fund. So it is a funder of funds that is focused on SME development. And obviously SME development with a very strong focus in this instance on the climate and clean energy sector. And I'm very happy to go into more detail on that, but we do know that has been really successful to date. we had a pilot of that program, and absolutely believe it's filling a niche in the finance landscape in Southeast Asia in particular. $50 million will be provided for a special window in the Private Infrastructure Development Group. So PIDGE is it generated in the UK. It is owned by donors, a group of donors, and it is an entity that focuses on project development and has a very strong focus on clean energy and the energy transition in Southeast Asia. So taking those larger infrastructure projects through to development and finding investors, and then with a really strong focus that has taken some time to grow over on development impact. And I think that's really important because ultimately these are development funds. And then the remainder of the funding will be utilised for technical assistance where required, and also to increase government partnerships. So we've long had a very strong relationship with Indonesia on government-to-government assistance. I was just recollecting when I was in Indonesia in 1998, and some of our first technical assistance programs to the Indonesian government came about as a result of their IMF program. People will remember that. It's a very famous photo of the executive director of the IMF standing behind Suharto with his arms crossed, looking sinister. At that point, we started, we as Australian government offered to provide technical assistance to help Indonesia meet the requirements of its IMF package, and since then we have developed a very close relationship with very targeted technical assistance that is demand-led. So importantly, we're not trying to sort of thrust technical assistance on Indonesia. We are responding to their needs and developing the scope of that assistance very closely with them. So I raise all of that because you can see that if we take a platform approach, we develop an ecosystem whereby if we identify bottlenecks, we have the tools to address them straight away. We've got some hefty private finance mobilising options in there to provide a real incentive to actually undertake those reforms, and we can because we've got sort of an umbrella over all of this, we can actually learn in real time and adjust as we go. So that, in a nutshell, is the Climate Infrastructure Partnership.
Thanks, Kate. I think it's a good time to sort of bring you in, Luke, because you've done a lot of work on the ground in Indonesia, sort of playing that facilitator role in sort of facilitating track 2 dialogues, bringing together governments and facilitating more partnership and growth in Indonesia. So maybe you can talk a bit about what's really happening on ground and some lessons that you've learned over time.
Sure, thanks Anjali, and thank you so much to the IGCC and the AIGCC for bringing us together and for bringing us together at this late stage of the COP. It's past the marathon stage. I think we're now into the iron sort of ultra marathon stage. So thank you so much for making this come together, bringing this together. And yes, you're right. We, through the last 2 years, have focused, as ClimateWorks with our presence in Indonesia, have focused on a series of convening opportunities around first the G20, but then the ASEAN presidency year. We hosted somewhere in the order of 24 events, including in partnership with your organisation. And honestly, we just kept hearing the same thing, which is the Indonesian side would come up with a spreadsheet of 502, I think the number was, bankable projects ready to go, sign here, let's get this thing moving. And then we heard from a range of investment bankers and institutional investors from all over the region, but also from all over the world, who said, we have a large pool of capital, really excited about this region. We just wish there was somewhere to invest it. There's no projects. And so after a few of these conversations, we got together with our partners and said, look, there's something missing here. And you'll recall we had that really great closed-door event in Jakarta where we really brought some of the key policymakers together with the key funders who had both said they were excited about the opportunity. We closed the door, we anonymised the conversation, and we said, guys, what's missing here? And it really came down to a few key policy reforms. And so I think the focus, and really welcome the investment from the Department of Foreign Affairs and Trade, I think the focus has to be really creating some tangible progress on these policy drivers, specifically around pricing for electricity. Now, could talk for many hours about the challenges in Indonesia's market for electricity, but the core one is that PLN is both a buyer and a supplier. There is something of an oversupply on Java, the world's most populous island, but actually that oversupply massively undercounts the potential demand if we were to switch to a fairer price for energy, I would say, for households, but also a fairer price for industry. I think there's great potential through mechanisms like the JETP to start to work on these policy reforms, but I think also the JETP is very clearly focused on one objective, and we need to work on this enabling driver. These are all very obvious observations, so I will make some sort of specific suggestions as well. At the moment, we know the capital cost is 2 to 3 times for people trying to invest in the region, and so that really needs to be our core metric to get down. I think the specific reforms, and I really welcome, as I say, the investment by the Australian government. I think that Australia has a real role to play here. I think that Australia is indeed a trusted source of advice. I've been a diplomat in the region, and the door is open for Australian ideas because we are a trusted partner. We can't match the dollars of some other players in the region, but we can absolutely match the technical assistance. I think practical steps on things like fossil fuel subsidy reforms, very difficult politically in Indonesia, but there is a real opportunity, particularly with the change of government in Indonesia, particularly with the opportunity of making our own progress. Say if we were to host a COP ourselves, this is the kind of thing that Australia could tackle, demonstrate some progress, and then take that progress to the region. And I think really that lesson of Australian expertise being exported to the region is one that we should capitalise on. We've actually made quite a degree of progress in Australia. We've set clear targets, we've legislated them, and they've worked. There's a lot of work to do, but renewables are entering our system at a really great rate. Investors are coming in. I think we can take this story to the region, and we can share some of these legislative reforms and create the enabling environment that we're looking to draw the investors in.
Great. I think, Luke, you've touched upon so many sort of points that we need to sort of get into a bit deeper to really understand this issue. And I'd like to sort of bring maybe Seb in first. I mean, just because you've sort of touched upon a lot of those issues around investment and what's really holding that back. And Seb, I'm really excited to hear that QIC set up a Singapore office just last week, and I look forward to working closer with QIC in the region. But I just wanted to sort of go back to you to sort of check on what your views are on sort of investors. How do sort of investors decide where to invest, and how do you sort of bring that focus into emerging markets? What are you really looking for?
Thanks, Anjali. I hope you can hear me fine. Greetings to everybody from Wurundjeri country here in Melbourne. I think in a fundamental, very basic way to break it down is investors are thinking about what's the risk and what's the return. What's the risk? What's the return? And there are all kinds of risks that we deal with in any jurisdiction, but certainly in unfamiliar markets or emerging economies and developing economies, there are some extra ones. So political risks, geopolitical dynamics come into play. So investors are not necessarily going to be comfortable thinking about that extra layer when it comes to some of the political considerations that might apply in new territories. But there's obviously governance risks and regulatory and legal risks, and so all of these become increasingly complex when you operate across different jurisdictions and unfamiliar jurisdictions. So those are layers of complexity, and I think to Luke's point about many investors saying that we're looking for projects that are bankable, it may be the case that the calculus there is in terms of what is bankable is slightly different from the investor's perspective, given those additional complexities. There are other issues around the dynamics of currency risks as rates fluctuate and so on, because from an investment point of view, what we're looking to achieve is to meet a benchmark in the return side of things, and obviously seek to go above that benchmark as much as possible. But again, those dynamics can increase the uncertainty, which makes the investment calculus even more difficult. But I think another one that is really fundamental, and Luke's mentioned it, is that cost of capital. And so this goes to the return side of the equation. When that decision is being made about how to drive investment into new markets, the question is, well, what will it cost us to do that? And what is the ratio between that cost of capital and the likely return on investment? So all of those issues sort of come together to affect how investors are going to be thinking about where to direct funds, because the priority for those institutional investors is not to make decisions about where money should go. The responsibility of investment managers, asset managers and other investors is to generate that return for their clients. And so that's why those public-private partnerships are so important in developing the structures and products that can facilitate those financial flows. But then the final thing that I guess I'd note on this point is that governments working together with the private sector and investment sector is key. But there comes a moment where, to Kate's point, government not only doesn't need to do everything, there's a point where the governments need to be able to say, we have done our part, and to be able to step back to allow the investors and the project developers to get on with things. So there's a lot to balance there, but I hope that gives you some sense of, I think, where the sector is at.
Great. I think that's a good beginning to sort of the conversation on finance and the public-private partnerships that we will sort of get into. But before that, I just want to bring John in. So John, you're sort of a very bold advocate in Australia sort of for the smart energy industry, and you've been doing a lot in sort of engaging in other markets outside of Australia as well. For example, your recent trip to India. And I think what we're seeing in emerging markets, when we sort of talk about it across Asia, there are some markets that are already doing really well. So for example, in the BNEF analysis of deployment of renewable energy last year, India was a sort of top market, and things have really aligned there. So what are lessons that you can sort of see from the work that you're doing that these markets in Southeast Asia could really benefit from?
Excellent. Pardon me. Thank you, and great to be here. So India is interesting. I actually went to India first in August last year, and with one question in mind: could we think about India as being a supplier of all of the components that the Australian market is going to need for our own transition? India has a target of 500 gigawatts by 2030, right? It's a massive target. They're going to produce a target for more than 100 gigawatts of capacity of solar panel manufacturing per annum. They're already at about 36 gigawatts per annum, so it's rapidly rising. And I was so impressed by what I saw there on that visit in August that I thought, I've got to ring the bell, and we've got to engage the Australian industry. And so in March this year, we pulled together 34 companies to take to India in a coordinated way. We're very pleased that the Prime Minister was able to launch our delegation in Ahmedabad in the state of Gujarat. And also in Saitiv, I think the stories are interesting. I was the advance guard for the delegation, so I was on the ground 36 hours before the delegates arrived. Within 12 hours of being on the ground, the energy minister from the state of Gujarat had found out that we were there, and I was summoned to his private villa. It's the public holiday, Holi, and so everything was closed, and the honourable minister received us. Absolutely engaged. And how does the state of Gujarat engage with these 34 Australian companies actually on the ground? 12 hours later, we had an invitation from the Honourable Chief Minister of the state of Uttar Pradesh. Now, it's a state of only 212 million people. It's an energy deficit state. So my staff would have resigned en masse if I said we're actually cancelling the trip and we're going to Uttar Pradesh. But we did send a delegation to Uttar Pradesh. And the message from the Chief Minister was this: we will clear the pathway for you coming and setting up and investing and operating in Uttar Pradesh. It will help with land and red tape, but more importantly, we'll actually provide you with off-take agreements. So if you're doing power electronics, if you're doing battery manufacturing, if you're doing the whole suite of technology, we'll give you an off-take agreement because our internal market is so huge that we can soak up everything that you can offer, right? And that becomes very compelling. Very interesting. So that was great. And then in a couple of months later, in July this year, I accompanied Energy Minister Chris Bowen to the G20 summit in Goa. And before I went back to the 34 companies involved and said, what was the outcome? What happened as a result of your work in March? And I was absolutely stunned. When we tallied it all up together, those companies had an advanced pipeline of opportunities in excess of 1 billion Australian dollars. These are companies right across the board. They're companies like Ardexa, a Canberra-based company headquartered in Singapore that do IT security and remote management of power assets. They were companies like Powerledger, a great Western Australian company doing blockchain technology. They were companies like Rare Energy doing ammonia generators. So if you can create renewable ammonia and for off-grid situations in places like India, that's fantastic. They were companies like 5B that do solar farms in a box. You drop the solar farm down and you deploy it super rapidly, very efficiently. So the opportunities are stunning. And so what I've found is that the interest in engaging from the Indian side, it's driven from the top down. They're moving at scale. They have manufacturing heft. Australia has fantastic intellectual property, right? We invented solar technology. It's important that what India puts in place is actually harnessing the most cutting-edge solar technology, actually coming out of places like the University of New South Wales, CSIRO, ANU and other places. So we have an absolutely fantastic opportunity. I think it's a good case study in action. And if the investment community swings in behind the companies involved and then they go and actually reap the benefits on the global stage. And I also just want to touch on inward investment to Australia as well. So we talked with two companies, both Reliance and Renew Technology. Both these are behemoths. These are really some of the world's biggest companies. Both of them are on the ground actually looking to secure plots of land of 2,000 square kilometres because it's in Australia where we're going to put the infrastructure that's going to create the renewable hydrogen, right? That's going to power steel processing, that's going to power ammonia production for fertiliser. And so you think about Australia as being a stable, advanced economy, a great investment destination with land that, I don't want to be trite, but we couldn't give away, right? Some of our arid, marginal land that is not used for agriculture and other things. And so we really are in the box seat, I think. The final point that I want to make is this. We've got to act. You look at one of our big member companies, CATL. They're the world's largest lithium-ion battery manufacturer. They've just announced that they're in partnership with the Indonesian government establishing a major battery manufacturing plant in Indonesia. Now, Australia's just announced we're going to roll out a lot of batteries between now and 2030 under the Capacity Investment Scheme. The Energy Minister announced this just in the last couple of weeks. 9 gigawatts between now and 2030. Well, this factory will produce 20 gigawatts per annum of capacity. Massive. The opportunity for Australia to become a strategic supplier to that Indonesian project, value-adding to our minerals, providing a guaranteed source of supply, being an off-taker for the battery cells, because the battery cell is only one piece of it. You've got to then put it into a pack and design it into a product. And Australians are some of the best of the world in applying that technology. And so the opportunities for partnership and then recycling, some of the work we're doing in battery recycling technology is really fantastic. So I'm really excited about using that as a case study and great opportunity.
Yeah, so what we're hearing is there's plenty of opportunity being created by industry in Australia, but that really needs to be supported by capital. So we really need to come back to the capital issue, because what we're sort of hearing is that there is clearly a role for private finance, but when you look at private finance, it's not like one big bucket of capital that can just flow. Like each of these sort of buckets have different mandates in terms of duration of investment, the type of returns that you expect based on what sort of capital it is, and the type of risk, as sort of Seb mentioned, that these capitals can sort of undertake. So there's a real role for blended finance, public-private partnerships. And I think one of the biggest factors from the Australian economic strategy for Southeast Asia was that they mentioned that there is a pool of capital available in Australia that can be deployed for development of Southeast Asia. So how do you sort of do that? So from the Australian government perspective, what are you thinking about to sort of leverage private capital more?
Thanks very much for that question. I think I want to broaden it a bit, so I'll certainly get to the capital question, but I just want to pick up on one of John's points, because I think one of the things that we don't talk about often enough when we think about de-risking is, yes, there's certainly the political risk factor and there's certainly the financial de-risking, but I think the other thing that we can get when we use blended finance and when the Australian government works closely with the private sector on this is the additionality that we bring on the development side and on the safeguard side. So if you are working with a blended finance instrument that the government deploys, you know that your ESG standards will be met. You know that we will be carefully vetting the entities that we're working with, and I've got a great example of that with Australian Development Investments. They will, before they invest in a fund, they will sometimes they'll invest in one fund in 90 that they do the due diligence on. So in a sense, what that is doing for the private sector when they're co-investing and when they're investing in that is it's doing a lot of the hard work for them. And I think ADI is a good example. This is the fund that I mentioned previously that invests in funds for SMEs. It's a good example because they've now gone through their pilot phase, and one thing that we learnt very clearly in that is that they've been working for a number of years and they have developed those relationships in the region with the big funds. And I think that's really critical, and it's another element to the de-risking. It's one of the reasons, frankly, that for the Climate Investment Partnership I was mentioning earlier, almost better to go with an instrument that we already have established because they are established. They form those relationships. People trust them. They know that when they are investing, that they've done the due diligence. So I just wanted to flag that. On that particular blended finance instrument, the pilot to that was really interesting because what we learned was that we expect a rate of return from that of around 0 to 3%. So it's really in the high risk part of the market, and it was very clear in the evaluation of that was exactly what was necessary, because when you looked at who was coming in after, it was development finance institutions, and then it was the commercial sector and the banking sector, and then in some cases I think the institutional investors. So if you think about that sort of hierarchy of risk, it's filled a nice niche, and so it's been a very good instrument for us to work with other donors as well, and I think that's really important. And my perspective on this is, obviously we do need to draw in that private sector capital and we need the institutional investors, but if you think about the goal here, that the scale of the challenge is so big, I'm pretty happy if we draw in development finance funds as well. If that's going to take us, to the point when institutional investors will come in, then we should absolutely be doing that. And that's a very different way of working, and it does require much greater collaboration and partnership. But I think it's really exciting. I guess the other kind of blended finance options that we have got a specific blended finance instrument with the Asian Development Bank, Australian Climate Finance Partnerships. So MDBs bring the same sort of de-risking capability that the Australian government does, but they have many more instruments that they can deploy. So that's also, you know, a very safe kind of place for institutional investors to look to co-invest. And then, of course, we've got the Export Finance Australia as well, which now has that mandate that it can invest in infrastructure in Southeast Asia. And I think that's a really exciting opportunity as well, particularly when we think about how we can bring Export Finance Australia into deals with some of our own blended finance instruments. And you know, the more that we can pull in, then the safer it looks for institutional investors, and the more we're able, I think, to demonstrate that it can work and sort of open those doors.
Yeah, so I want everyone to sort of come in on the blended finance and the partnerships question, but I just want to add one more sort of layer to it, because I just feel like from the emerging markets perspective, there's also a lot of efforts being put in to sort of attract capital, like in terms of taxonomies that's developed across Southeast Asia, specifically Indonesia is consulting on taxonomies. Everyone's trying to build these data systems that makes monitoring, reporting, and verification on like your investments a bit easier to do. And so there's a lot of efforts that's being happening in these markets as well. So just sort of look at, you know, the options available to investors. Like there are these blended finance vehicles that public finance institutions are setting up, governments are setting up, but there are also efforts being taken in emerging markets to make it easier for, you know, private capital to come in. So like, how do you see this sort of growing? I think I would want all three of you to sort of come in on this question.
I'm happy to comment really briefly, but I'd like to commend the Australian government for this type of initiative, and I think it works, and we've seen it work in Australia because we've had ARENA and the Clean Energy Finance Corporation play exactly this role. We know that it has disproportionate impact. If you get that foundation piece right, you then allow the private capital and other to pile in on top, right? It de-risks the projects. I think it's a really great initiative.
Yeah, I think that's a really good point. I think it sort of goes to the idea of exporting our capability and exporting our experience, and being a credible partner in the region has been a strength of Australia, you know, historically, but I think in this space perhaps not, and it is a real potential for us. It also lines up with our domestic imperative around the superpower thesis. So, you know, it's really interesting to hear that story of you know, the potential in India for us to meet our domestic goals. And I think for me, the thing that I keep coming back to is that there is a lack of awareness of the opportunity and the maturity of these markets. I'm constantly fascinated, was constantly fascinated in my previous role about people would land in Jakarta for meetings, and then I would invariably get a text message about how efficient the airport was and how clean the taxi was. I mean, guys, this is one of the most, this is one of the most dynamic cities in the world, let alone the region. Of course, you've got a good taxi, and I think it's really incumbent on us in Australia to start sort of looking to that region. One of the things that really came out of the consultations around the Southeast Asia economic strategy was that there's a really large pool of capital in Australia, in the region that we have tried through our foreign policy for many, many years to find a place in. There's a really large pool of capital that is just skipping over Southeast Asia and trying to find returns in other parts of the world. And I think it's on us as a civil society and as government to kind of educate and sort of show the opportunities there. I would just jump in quickly on this point about blended finance. Something that we kind of are exploring a lot is the opportunity to add the P to the triple P, which is philanthropy. There's a great deal of philanthropy energy in this region, and it's something that we're capitalising on, given that we've had a physical presence in Indonesia since 2018, and we're partnering with the first foreign university in the region, Monash University, and so where we're based. And you know, there's a real potential there. We're working really closely with groups like the Mission Possible Partnership to just show the possibility of this stuff. So start these kind of place-based, particularly investments in renewables, and just show the market by doing that there is a great potential for return here. There are policy problems, there are, you know, barriers, but actually this can be done, and the philanthropy just gives you that little extra push.
Yeah. Seb, I want to sort of bring you in now, but just before that, I just want to let the audience that's here know that we have some time for questions. So if you have any right after Seb's sort of intervention here, please do keep questions in mind and I'll come to you. So Seb, maybe a bit on the blended finance and also the enabling environment that's already being created in these markets in Southeast Asia.
Thanks, Anjali. There's been some really, really good points made by everybody else here that I'll speak to a little from the investment side. And the first goes, I think, to Luke's comment there about people arriving in the airport and saying, you know, isn't this efficient, isn't this clean? And I think that there's a genuine lack of familiarity for many people with Southeast Asia. For many of us, we're very familiar, we've lived and worked in Southeast Asia, and yet for a lot of Australians, I think the idea of Southeast Asia is Bali, and many people don't even recognise Bali as a part of Indonesia. So I think that there's, for the business sector, arguably, you know, in the way that you know, John was talking about delegation in India, for finding ways to just create, increasingly build a long-term strategic approach that government has, those informal, direct relationships and connections. And I very much agree with Indonesia. You know, I've been, you know, involved in some government-supported initiatives around relations between our two countries for many, many years in different ways. And I think that those are really positive steps. Coming to the idea of blended and hybrid finance vehicles, this is really important. And so Kate's point about de-risking, because you're bringing all of these different groups together, is absolutely critical. But something that John said earlier as well about engaging directly with, say, the government in Uttar Pradesh or Gujarat, and that notion of governments being able to clear red tape to facilitate investment and capital flows. I think investors are always going to be a little wary in new markets when they're told that, hey, we can clear the red tape. Because what we need is not so much clearing of red tape, but transparency into the governance processes, and that's absolutely critical. There has to be that line of sight and that clear line of sight to de-risk the legal reputation stuff, all the rest of it. So this idea that we build those blended vehicles with different partners that provide ESG guarantees, that recognise some of those critical issues, also means that we can then, Australia can leverage some of our expertise in the capacity building approach around, for instance, those sustainable finance taxonomies that Anjali, you referenced. So when they are coming into play, when they are synchronised across different jurisdictions, when we start having that global community of practice in which regional partners are level in terms of those opportunities, then I think investment can flow more easily. And that the last thing I'd say then about those approaches to blended and hybrid finance tools and instruments is again something that's been mentioned before, but is recognising that it goes in different directions. And that's one of the things that I thought was strong about the Southeast Asian economic strategy, is that recognition that Australia can provide a lot, but if we do it in a partnership approach where we're seeking that mutual return, so we know what we've got, but we're also coming to the table and saying, here's what we need as well. And I think that that's a really positive way to move forward.
Thanks, Seb. I think you've put it together really well. But I think just one more, topic to sort of cover before we sort of come to the questions. I think what's come out quite clearly is the role of capacity building in sort of understanding the different Asian markets and, you know, working with investors to really help them understand these markets, what their needs are, and then, you know, bridging that gap. And I think that's also one of the points that we've highlighted in our IGCC report on sort of investing in emerging markets and what is a gap that's holding back pension money from sort of flowing into those markets. And I know the DFAT is doing an excellent job really on sort of, you know, working with the ASEAN Secretariat and developing reports on an annual basis to see what the priorities in ASEAN markets are, differentiating it by market, like understanding the development in each market and what their priorities are. So I think both Luke and if you could sort of, Kate, if you could come in as well and talk about those efforts, because I think those are really important to sort of bridge the gap, and it requires a bit more discussion, I feel.
Thanks. Look, I think capacity building it's a funny term, and it makes some people uncomfortable, and it makes me a little bit uncomfortable too, because I really do think that we are at a point now where we are sharing lessons in real time with our contemporaries. We're not going in with a deficit approach, thinking that we need to bring people up. And I think that's one of the really lovely things about the closeness of our relationships in the region, that we've got that capacity. If you think about what we're doing, we are going through a massive transformation of our economy very, very quickly. You know, the largest change that we've had to make or absorb since the Industrial Revolution. Like it's big, and you know, some would say we were late to the party. So we're doing a lot in very, you know, and there's a lot of change. There's actually a lot of interest in that and in sharing lessons on that in real time. So I think that's something that we can be responsive to if our partners in the region would like to learn from us in real time. And there's quite a lot of interest in that, and that's as it should be. And the government, it's not as I mean, it's as it should be, because we're sort of located in the same region. We've been highly dependent on fossil fuels. You know, very, very many similarities in the broad context. So that's fantastic. And what I really like about that is that there is a genuine desire across the Australian government to work closely with its partners when those questions are asked. And I just came out of a couple of years working in the Treasury, and I can tell you that it's very underrated how much of that peer-to-peer learning happens just with increasing frequency, just by setting up video calls with, you know, I want to understand something about tax, get the tax people on a call. Like, it's really fantastic, and I think it's a great way for us all to sort of to lift. Then in addition to that, we have the capacity through our more traditional aid programs to bring in TA to supplement that. And frankly, sometimes governments aren't well placed to do some sorts of TA. So long-term, if we have a request for long-term systematic capacity building with HR elements, etc., that's not really something that the government has a comparative advantage in. That might be when you bring in the consultants to kind of bolster that. So I think that sort of close working together is a really critical way of addressing some of these issues.
Great. Luke, do you want to come in?
I don't have a great deal to add other than just to echo. I think capacity building can be understood in a range of different ways. I think the thing I would emphasise is there is a genuine opportunity for knowledge sharing, and I think your point about being able to do that much more readily with technology is really important. I think, again, to go back to that comment around the 2040 strategy, there's just a great deal of, call it what you like, call it education, capacity building for Australian investors. And I think it's true, we are a decade or more behind. And countries like Indonesia have learned ways of working in this ecosystem of clean technology, and I think John could speak to this in quite some detail, but Indonesia is well integrated into the Chinese market for the supplies of the tools we need to do the energy transition. I would argue we are not as well integrated, and so you can learn a lot through exchange there, I think.
John, do you want to just come in here? Because we spoke a lot about investing in sort of other markets, but there's a big role that investors in Australia can sort of play in sort of investing in Australia to export energy to these markets as well. Do you want to speak a bit about that?
Yeah, sure. And just to pick up on a point that Kate was making, that almost capacity building in this context is as much facilitation as it is capacity building. And I think Kate's right. We've got to use the infrastructure that we already have in place, because there's, a whole lot of networks that have been set up, so we need to augment that and double down on it. But I'll give you one tangible experience, and that is that I'm being asked as I travel all around the world, by grid operators a really important question. They're very nervous about how do we deal with high levels of renewable penetration in our grid. And it's something that our own engineers and AEMO and others were very concerned about a decade ago. You know, when people were saying once we get to 20% renewables, the whole thing falls over. There's kind of this inherent fear about how this happens. The South Australian grid, at times of the year today, is powered 100% on rooftop solar alone. I'm not even talking about large solar or wind, I'm talking about only rooftop solar, right? So every substation in that distribution network has reverse flows of energy, right? It wasn't designed for that, but we're finding is that it is absolutely manageable. And so we are at the forefront globally of understanding how these things work. I think we can alleviate a lot of the anxiety of other jurisdictions around the world, and we need to kind of share that knowledge in a coordinated way and kind of tell that story. Huge amount of interest and hunger for that kind of technical information and advice.
Okay, do you want to also touch upon the export sort of question and investing in Australia for export?
Well, look, you know, here's our national comparative advantage. You take a solar panel, and the same solar panel in Germany and in Australia. The one in Australia will produce up to 4 times more energy, 4 times, right? I'm not talking about 5% better, right, than the one in Germany or the UK or Russia or Japan, right? So massive, you know. And so the ability to harness that super low cost energy, actually riding on the back of Australian innovation, of German feed-in tariffs that scaled up the market, and Chinese, you know, really manufacturing at scale, and then other markets like the United States coming on and India coming online, is really good news for the whole world. Harnessing the dividend of that to re-industrialise the Australian economy. We are a dig and ship nation, right? We take dirt and we put it on a boat and we send it to somebody else. If Australia becomes the home of the most cost-effective way to actually harness renewable energy and process things so that we're actually exporting embedded renewable energy in our exports, all of a sudden, the large-scale manufacturing, you know, the furnaces and the big industrial, its logical place in the world is in markets like Australia. But I say again, this is a race. We kind of think, we have this Australian exceptionism when it comes to kind of thinking about these things, that kind of we're the only sunny country in the world, you know. We're not, right? The Middle East, Chile, parts of even the deserts of America, you know, really great places for this. We've got to get our skates on. We've got to have kind of sharp elbows. We want to capture a disproportionate value of the world's decarbonisation transition for the Australian economy. And we only do that with a plan and leadership and harnessing the investment to make that real.
Great. And I think things are aligning for Australia really well with this government as well. I just wanted to check if there are any questions from the audience before we wrap up. Anyone? No? Yep. Go ahead.
Thank you. Just wondering if you could explore the opportunities of Australia hosting a COP31 and what that would mean for Asian partners. There's been a lot of focus on what it means for the Pacific, for Australia, but what does it also mean for our big Asian trading partners and energy users?
I think that's maybe a good question to sort of wrap up, like looking forward to sort of COP31, what do you sort of see in terms of relationship between Australia and Asia and the benefits that it could bring the Asian countries as well? And then maybe you could add one thought on what you've sort of taken away from this panel, because there's a lot that we've gone through. So maybe one takeaway as well. And then we can wrap up this discussion. I don't know, Seb, if you're on, maybe we can start with you. Seb?
I'm on,
Okay.
if you can hear me, but my camera seems to have stopped working.
Yes, we can hear you, so that's great.
I think that COP31 is a huge opportunity for Australia, and as you noted earlier, Anjali, my organisation is the Queensland Investment Corporation, and so we manage funds on behalf that are part of our funds that we manage are from the Queensland government, and so we have particular mandates in particular areas that are of, if not unique, then certainly valuable to Australia, like natural capital and critical minerals. And so these sorts of domestic capabilities and opportunities, I think are really worth us leaning into. But very much has been noted, in recognition of what we can bring in and what we can learn from other jurisdictions and other partners in our region. So when it comes to COP31, I think it's the kind of thing that when you have an anchor like that in the future, it spurs action in the present to get there. It really sort of says we need to step up, we need to move forward. And as someone from a climate science background, I'm very keen to see action accelerate all the time. So hosting COP31, working with our Pacific and regional partners to increase ambition, recognising in this space, the investment space, unique opportunities, potentials and ways that we can match those to those of our partners in the region, I think are hugely good things going forward.
Great. Luke?
Yeah, I think I'd just jump on John's point about this concept of a superpower, which is in the parlance now. It's in the budget statements. The Prime Minister says it. The Minister for the Treasurer says it. The Minister for Climate Change says it. That's great. But your point is absolutely right. Lots of countries can, could, will be superpowers in this space. Australia has a competitive advantage, but talent's great, but hard work is the thing that gets you there. And in this race, we have a little bit of talent, but we are going to have to do all the hard work in order to win the race. And I think the more I think about a COP31, the more I go from thinking it's a nice to have to it's kind of an essential way of catching us up. In order for us to host this credibly, in order for Australia to host this credibly, we will need to demonstrate domestic capacity, but also regional leadership potential. Countries like Indonesia are widely understood to become, large. Indonesia will be the 4th largest economy, 5th largest, depending on which consultancy you prefer, by 2050. If that economy reaches an energy intensity anything like ours in Australia, then we all lose, and 1.5 is completely off the table. So lots of countries realise that, lots of countries are focusing on that, and there's a real leadership role to be played in cooperating. I think the question I would have for Australia is, as Indonesia becomes more important to us, how are we going to become more important to Indonesia, and to the region for that matter? And I think this is the kind of, catalysing sort of focusing moment where you can actually demonstrate, here are some things we've done, here are some things we've done with you in partnership, and here's an ongoing pattern of cooperation that we could take forward.
Great. Kate, I'll let you have the last word, so let John go. Let John go now. Yeah.
I think COP31 would be a fantastic platform for us, and it will turbocharge all of those relationships that we have. We think about Australia in terms of connecting to Asia, under the banner of one grid, one sun, one opportunity. So you think about sun cable, the prospects of actually having Australian electrons going from northern Australia in to power the grid of Southeast Asia, Singapore and Indonesia. That's still emerging, right? But we're excited about the prospect. But the opportunity for Australia is much greater than direct electron transfer. It's about the embedded renewable energy into products and services. It's about the critical minerals and the processing capability in Australia. It's about the innovation and R&D potential of Australia and how we help turbocharge what's happening in Asia and happening in the whole world. So I think COP31 is super exciting. I think that we all need to band together to really do what we can to win this for Team Australia. I think we've got to back the government's bid in for this, and it actually takes the voices of all of us to stand up and help do that, because the dividends for us in Australia are immense, and I think we can help shift the dial globally. Australia can play an outsized role globally, and that's why we're all here.
Kate.
I think the others have captured all the points I would have made. I mean, obviously, COP31 is important to us. It's also very important to the Pacific, and we're really, really pleased that they have supported us in the bid, and that they would like to work with us on the COP. In the context of the region itself and Southeast Asia, completely concur with Luke. Like this is the region that drives the world's growth, and if it grows without transitioning, then we can forget about our climate goals. So, but it is a region that doesn't get the attention of the rest of the world as much as it should, given its absolute importance. So I think COP is incredibly important for the region, and it's also very important in the context of our own ambitions in relation to transitioning our economy and carving a new role for ourselves away from that. What did you say? Dig and ship? Yeah, dig and ship. Yeah. Okay. Thanks.
Great. So I think that wraps up our conversation really well. We went through some of the detailed problems, but we also talked a lot about the solutions, the opportunities, and most importantly, the hard work that really needs to go into this to sort of seize the opportunities both for Australia and for Southeast Asia. So there's a lot of work to be done, and looking forward to working with all of you together on this. Thank you for joining us for this discussion. Thank you. Thank you for joining us.